everybody. It is that time of the week. Unfortunately, JR, Romero, and Sami Abusaad are serving suspension, so they will not be with us today. So I have Derrick Oldensmith and Scott Bauer of Prosper Trading. And today we are going to have a little bit of a change of pace because I don't know how many more times I can ask, is the market topping out here? I want to, punch myself in the face every time I ask that question. So we're going to do something a little different, and we are going to focus on the biggest trading cliches, because I find myself saying them and asking questions revolving around them, and we're going to see which ones make sense, which ones don't make sense. So we're going to start with the first one, which is don't fight the Fed. Like, do you agree with this one? Do you disagree?
Who you want go first here?
I guess you're going first, Scott.
I guess I'm going first. It all depends. If you're a trader, you do what you want. Don't worry about what the Fed is doing. If you're a trader, if you're a longer term investor, if you're on the retail side, then yeah, it's maybe something you follow. But even when the Fed is in a clear path of whether tightening or easing, there's always going to be trade opportunities on the other side of that. So we hear don't fight the Fed all the time. I think that is a tough one, especially coming from a trader.
Okay, Derrick, how about you? Do you fight the Fed or do you go with the flow?
It's a similar thought process. I think it's a good general rule to understand, when the Fed is cutting and they are increasing liquidity and there's easing ongoing, that generally you're probably going to want to be looking long more often than short, even on your trading opportunities. But there's a lot of nuance to it. There's a lot of things that are going on underneath the surface. It doesn't necessarily mean up every single day always. And sometimes there can be good opportunities to get pullbacks or to then be able to buy those dips. Or in other situations, you could have an economy that is worsening faster than the Fed's able to cut. So you could still certainly go down even if the Fed is easing. So there's certainly some nuance there, but I think it's an okay general rule.
That's a svelte looking Jerome Powell, by the way, there.
Yeah, I was trying to get him like shirtless, like all tatted up, but stupid AI is not cooperating with me today. Again, how many billions of dollars are they spending on an AI? I can't get a freaking picture the way I want it. Okay, never catch a falling knife. I mean, there's not much falling these days, but like, how do you guys feel about like something cratering? Do you ever get tempted to say this is the bottom?
I don't get tempted to say this is the bottom. I absolutely do get tempted to put a position on. Two different things there. So I'm never going to call a bottom. I'm never going to call a top. If a stock, if there's news out there and all of a sudden, you see something dropping, pretty quickly here, doesn't mean I'm blindly going to go in and take a position. But if I can, have the time to look at technicals, fundamentals, then absolutely, I will look at that as an opportunity to take an option position. I would never just blindly try and catch that knife.
Okay, Derrick, how about you? How do you feel about falling knives?
Yeah, so generally speaking, when you see that falling knife, you want to capture it after it stops falling. So it's on the way down, and then you see that heavy volume increase. You see the very large downside extension, and then you buy it on the way up after it's happening. That's not to say that under the right circumstances, when I see that volume capitulating, that I won't start with a smaller feeler type position while it is still on the way down. So you could argue that I am catching that knife, but I'm trying to do it in a small way, and then really I want to be able to put size on and add when I've got more confirmation, when it's then bouncing back after that volume capitulation, got that nice downside tail from a technical perspective on the chart, especially if it's into a support level, something like that. That's what I want to be looking for.
Okay.
I mean, here's a couple great examples. I'll be honest with you. Over the last couple of days, we saw Netflix as one of them. Now that was, I would say that, we didn't see Netflix plummeting 10, 20%, but there was a lot of people out there that when we saw Netflix really sell off said, oh, I got to stay away from this. Another one, we're seeing it this morning, actually, IREN, which is real similar to Qubit from the other day. Those are, to me, they present opportunity if you can, combine that with technical and fundamental analysis.
Yeah, there's a ton of almost inverse falling knives going on right now of these stocks, these meme stocks, these pre-revenue companies, whether they're quantum names or crypto-related names or nuclear-related names that are just vertically up, 4, 5, 6 days in a row, vertically up. And at a certain point, like RGTI, I started to short a little bit of RGTI yesterday. I actually had a great ad near $48 to the short side on this thing today. At a certain point, you start to hit that extreme extension. I'm not afraid to start a smaller position that I'm willing to build into, but that's what's ongoing now is the reverse knife catching.
Yeah, it's funny. Like, yeah, I guess we need to invent like a flip of, some kind of flip side, but because it does feel like this is like a buy high and sell higher market, which of course brings us to the next one. Now this one might be the dumbest of all, but like buy low, sell high, which is like, I guess this is the American dream.
It's interesting, this one, because is cliche as this might be, it actually holds true when you're looking at technical analysis, especially for me when I'm looking at, let's say, implied volatility on a particular stock, on a particular option series. There is absolutely something to be said for buying low, selling high, following those charts with implied volatility. When you're looking at picking a point to buying or selling a stock, that's a different animal. You're never going to buy the low. You're never going to sell the high. It's just not going to happen. And so we look for trends, right? We look for being in an area. But I actually think that this one is pretty good as long as you don't take it to the letter of the law.
Yeah, like I mean, yeah, I definitely think that as far as the market goes, because like I looked at annual returns in the S&P, and if you buy at the end of a down year, like you basically always win. Like probably simplest strategy ever. Derrick, how about you? Are you buy high, sell higher, or you buy low, sell high?
I was going to say my biggest issue with this is buy high, sell high is a strategy. It's a momentum strategy. Buy those breakouts when the momentum comes in, and you can get stuck in a sideways position that could go sideways for years and years and years and years. And maybe you think you bought the dip. Maybe you did buy the dip. Maybe it came down a lot and you think you're buying low and you're going to sell high. Instead, you could be sitting on that cash or trading something else, and then you wait for that base to actually break out to the upside. You come in with the base breakout trade, you're buying high to sell higher, and all of a sudden you're making a lot of money much more quickly than having just sat in the position for 2 years while it was building out that base. So buy low, sell high, absolutely. But why not buy high, sell higher also?
Yeah,
absolutely fair.
Dylan in the chat is saying GLD is the perfect example, which I'd agree with. Gold just won't stop in the minors, or even better. Okay, so the next one is specifically for, I was thinking of Derrick when I included this one because I know he's mentioned it before, but no one ever went broke taking a profit.
You want me to go first because I talk about this one a lot?
I think that I would say this is one of Derrick's favorite things he likes to blow up, which is why I included. So of course, Derrick, the floor is yours, sir.
For sure. So I hate this one because I do think you can go broke taking profits. As a matter of fact, while the reason why most traders fail in this business is because of a failure to manage risk and manage money consistently and properly over time, the secondary reason why I see some people fail in this business is because they take their profits too quickly. If you're risking 5 and every time you see that you're up 1, you're getting out of your positions because you're booking some profit and you're liquidating all the positions, the risk reward is never going to work out to the point where you're going to be able to make money in this business. So if you need to be able to have game plans that maximize reward, which obviously eventually means that you're going to be booking profit with a game plan. But if you're doing it the second you see green on the screen, the numbers are never going to work out for you in the long run.
Yeah, nothing for me to add to this. I would literally say almost word for word what Derrick just said.
You know what? I think there's also another angle to this where taking a profit could really create regret. Like, because I know, like, I remember in 2009 buying stocks for 10, selling them for 20 the next week, and then watching them go to 300. Like, so yeah, so I do agree with what Derrick said about taking profits too early. Okay, another classic one. The trend is your friend.
I agree with that one. Again, so much comes into technical fundamental analysis, but I absolutely agree with that. And right now, just in general, the overall market, the trend is up. So we get a down day like we did yesterday. Doesn't mean that you come in and buy just because we were, but until that trend is broken, the trend trading something like this typically holds. Now that trend is going to break at some time, but I am a firm believer of the trend is your friend.
Yeah, I think that this is one of the most basic sayings in trading, but some of the sagest advice that there is. That the trend is your friend. Friends can last longer, from my experience, than almost anyone ever expects they will last. The current trend right now, in my opinion, with the market included, I could point to 10,000 reasons why this market should go down right now. Yet every single day we are up. We go up 0.5% like it's nothing. When we go down 0.5% right now in this environment, it feels like the sky is falling. That's what this market's been like recently. And if you are tuning out all the noise, all the politics, all the everything, and you're just recognizing, hey, we're in an uptrend, so I'm going to buy the pullbacks, you're doing better than 99% of the people out there.
100%. 100%.
Like, so related. So why do you think so many people like are obsessed with predicting the end?
I think that's human nature. I think human nature is always to have your guard up. So, if you bring that emotion into trading, as Derrick just said, you're going to fail. And I firmly believe that. The market, there's that old saying, the market can stay, more irrational longer than I can, stay solvent or whatever it is. And listen, Derrick and I are professional traders. We've been doing this and we've seen just about everything. But I think that the typical retail person out there, they have their guard up and they let their opinions dictate their trade as opposed to their analysis.
Yeah, and also it just sounds really cool on TV when you're talking doom and gloom, as opposed to just saying, yeah, market's going up, so it'll probably keep going up. No one's giving you the ratings for that. They're giving you the ratings because you're getting up and you're being like, well, we just sent a nuclear submarine to Russia, so short the stock market immediately. That catches more ears and gets better ratings. That's why people like to talk that way.
Nobody ever says the trend is your friend on the way down.
Well, some people do. I mean, I can tell you that the traders back here certainly, will certainly follow that. But you're right. Most retail traders won't.
Okay. All right. Another classic one. Whoops. StreamYard is being stupid. Okay. Cut your losers short and let your winners run.
Derrick, you want to go first on this one? I feel like I've been jumping the gun.
No, for sure. I mean, look, trading comes down to risk reward, right? Risk reward and probability of success. And I would say that actually most of the really good traders I know are wrong more often than they're right. Not all of them, but most of them are wrong more often than they're right, and they make up for it in their risk reward ratios. That inherently means that you need to cut your losers early and let your winners give you a multiple of what you're risking on that trade. There are some exceptions. If you've got a big enough of account and you want to start with a little feeler position and it's very small, so it's negligible because you want to keep an eye on it and you're letting it run against you, that's not necessarily the end of the world, depending on what the money management approach is around the trade. But for sure, this is a risk reward business, and you need to manage risk, cut the losers quickly, and make a multiple of that on the upside. And that's what this statement perfectly describes.
Yeah, 100% agreed. And, some people say risk reward, some people say reward to risk. It's all the same thing. And without monitoring risk and without having proper risk reward to risk metrics, not gonna live to fight another day.
Okay, like, so why do you guys think so many traders are obsessed with like batting average?
They shouldn't be. I think that's a big misnomer. In fact, when I speak to people, when I do webinars and talk to my students, I try and sway them away from that. I try and sway them away from looking at 80% wins, 20% losses, or whatever it might be. I could tell you for 100% fact, I can go out and I can give you 90% wins all the time if I was trading the wrong way, right? I would have 90% wins. I wouldn't have my risk in check, and that 10% loss would wipe out all my wins. So yes, traders are really, really kind of focused on that win-loss ratio. And I don't really think they should be.
I mean, like, Derrick, what do you see with new pro traders? Like, can they accept that batting average is not everything?
Yeah, I can tell you that I never look at my batting average ever. It's not a number or a statistic that I care about or I look at really at all. So I completely agree that you got to focus on the right things in this business, and that's not it.
Like, do you think it would like screw with your head if it was too low? Because I think a lot of people out there, if you could give them a guaranteed system from God with, let's say, 20% win ratio, but they'd be making $10 million a year if they follow it, I think a lot of people would break down and not follow it.
Yes, and I think we actually see the opposite of that, right? You look all over, the internet, or everybody sees the ads out there. I've won 90% of my trades for the last umpteen years. Okay, that's not a metric you want to see. If you're a retail person, you don't want to see that. You don't want to buy into that, because like I said, that's I could be 90% forever and ever and ever and lose money. And so that it is really, really tough for many, many retail traders to understand that.
Okay, this will be the last one. Don't try to pick tops and bottoms.
Well, my old trading partner used to have a great saying about picking bottoms. You know what happens when you pick bottoms? Stinky fingers. But anyway, yeah.
Ladies and gentlemen, brought to you by the T3 Compliance Department.
I know nothing. I'm not part of that.
I agree. Picking tops and bottoms is a fool's game is the other kind of common saying. It's the exact same one. But I believe in not picking tops and bottoms, but picking strategic areas where the market should retrace in the other direction. So I'm a big stickler for definitions in my trading. There's a difference between a reversal and a retracement. And I am not a good enough of a trader. I don't know if I've ever met somebody who's good enough of a trader to be able to perfectly pick every top and bottom on where the market is going to reverse. But I have rules in place where I can pretty strategically pick spots where the market should retrace back in the other direction based on extension, volume confirmation, a whole bunch of different factors that I look at. And then I have additional rules in place for if my retracement becomes a reversal, then I can still capture the reward profile of the reversal without actually picking for it. So I'm going to book some profit just at certain retracement rule levels, but then maybe hold, depending on the situation, 10 to 25%, maybe a little bit more of my position, just in case that retracement actually becomes a reversal and I can capture it.
Absolutely. And what I said before is you're never going to pick a top. You're never going to pick a bottom. You have to look at indicators and look for general areas. When I say general, that doesn't mean, necessarily have to be wide, but if you're absolutely trying to pick those precise points, you're either never going to trade or you're not going to do very well. One of the two.
Okay, but at least like on the topic of bottoms, do you guys have any like general rules for at least when the market is washed out? I know that like every time the VIX is like over 50, I'm tempted to just buy everything, and then inevitably, like a month later, the market's up like 15%. I feel like an idiot because I didn't. Like, do you have any kind of like even loose rules for knowing when things are too far stretched in one direction or the other?
Yeah, but I would just go back to exactly what I just said. If I see, so the way that I look at markets is in terms of risk reward and probability of success. Risk reward for the most part is simple math. Risk in 1 to make 5, whatever ratio is that you're looking for on the trade. Probability is much more difficult because probability, there are just so many influencing factors on any trade that you take that are going to define the overall probability of that trade. The influencing factors for any trade I call layers of probability. All these different things that are going to impact how well my trade can potentially work. So if I'm looking at a counter trend trade where the VIX is at 62 or whatever, like it was back in like August of 2024, well, I'm seeing that as an additional layer of probability on my trade, which means when I go back to my game plan, I'm going to be riskier. I'm going to be greedier. That's the term I'm looking for. I'm going to be greedier on that trade with like a larger percentage of my position because I have additional layers of probability on my side. That means there's a higher probability that this is actually it, as opposed to, again, just saying I'm the god of trading and I can tell you every top and bottom. I can't do that, but I can tell you there's a much higher probability that this is it in this circumstance compared to this being it in this other circumstance that doesn't have the same confirming factors, and therefore I want to be more or less greedy and take more or less risk based on the answers to those questions.
Okay, and everybody in the audience, that noise is actually coming from the CBOE trading floor.
It is.
Yeah, so that's not a green screen. Scott, if you could turn around and yell and tell them to shut up and stop trading because we're busy.
I would probably get a few things thrown at me that I wouldn't want to get hit with.
Okay, all right. It is almost time to say goodbye, but anyone have ideas? Anybody like anything or even hate anything? I know this is a weird time in the market.
I hate the market. I know we just spent all this time talking about how the trend is your friend, and I agree with that. And we're making new all-time highs right now. But the spot up vol up that we're seeing right now with how the VIX has been trading in conjunction with the market that has basically gone on for all of September and for the most part has continued in October. I know the VIX is crunched back a little bit lower today, but we got to above 17 yesterday on the VIX. I've never seen spot up vol up last for this long without the market getting a pullback, a bigger pullback, like, not a 0.3% pullback like we've seen on a couple of occasions. I'm talking a 3 to 7% pullback. There's so many things under the surface right now of this market that are unsettling that I'm recognizing that the trend is my friend. I'm trying really hard not to overly fight it, but I am like so trigger happy right now on the short side for if I can get any sort of technical confirmation that this market wants to pull back, because I think that when it breaks, it's going to break really, really fast for that 3 to 7% pullback, and you've got to be ready for it. And the other thing I've been telling the traders that I work with is, when that happens, if you're buying the 0.3% pullback, which has been working obviously, and you don't have that stop in place and you don't have that risk management in place, we could get 3 down 2% days in the blink of an eye when things actually come together, and you need to be prepared for it. So I'm just really watching this VIX complex right now in conjunction with how the market's trading. Realized volatility is super low with implied volatility continuing to inch up. I saw a statistic that Goldman Sachs came out with that last week the S&P was up 5 days in a row while the VIX was up 5 days in a row. And that's the first time that's happened going back to 1990 when it was created.
Yep.
This is very, very unusual environment right now, and traders need to be prepared that while everything is hunky-dory with this upside grind, you got to be prepared that the range of outcomes is increasing and things could speed up very, very quickly.
And that is all incredibly sage advice, and it's all true. But let me just tell you something in real time right here. This is the S&P 500 pit right here. The VIX pit is actually about 25 feet over here. And I was just right before this interview right now, I was just in there and I was talking to a bunch of the brokers and the traders in there and looking at the order flow. And there are a lot of put buyers and call sellers at this point. You would think that it would be the opposite, right? And I agree exactly with what Derrick said. You know, you look at some of these metrics and you would think, okay, you've got to prepare for something to happen. And that's what I always teach my students too as well. Just telling you that the current landscape is there's a lot of put buyers and call sellers.
Interesting. Okay. All right, folks. That is going to close us out. We still don't know what the hell is going on with this market. Nothing makes sense. And I don't think anything will ever make sense again. So do with that what you will. Okay, guys, thank you for joining me. And I apologize for starting late. It was totally my fault. I had a bunch of technical difficulties. We will be back next Wednesday at 12 p.m. Eastern Time. Everybody have a wonderful day and good luck out there.
Thanks, guys.
Thanks, guys.